Okay, guys, let's get into the stock charts. We're going to cover stock market technical analysis for Monday 2-1 2022. Okay, starting off with tech sector. No real change as of today. We're just pretty much right in that area that we were at yesterday, basically flat. You can see here on the hourly chart on triple Qs that we're just still within this flag. So yesterday we traded up to the top end of the flag, and today we've pretty much just gone sideways. So we are right there really at the 200-day moving average for the triple Qs. That's sitting about 365.96, and we're just kind of right there. So haven't actually tagged it yet. We might pop up and tag it, but for the most part, pretty much at resistance. And we're looking for downside in this area. Looking at SPY, you'll see here SPY is pretty much, basically flat as well. Here's the hourly chart, trading right up into that resistance. Again, still holding that flag on the hourly chart. And we are basically just kind of treading right along that resistance line. The 200-day moving average is also right here. And you've got horizontal price resistance at 450. So big resistance right in this area. And we're just kind of testing that right now. So we'll see how that turns out. But I am looking for some downside from here. Okay, we don't see it yet, but that's it. No real change on those. IWM continuing to rally a little bit. We have maybe a little more upside on IWM. Resistance on IWM I really see is about right there at about 208.85, 209 area, and possibly a little bit of resistance right here at 204.90 area. Okay, so maybe a little more upside on the IWM, and that might mean that we're just going to tread water in some of the large caps like the SPY and the triple Qs. We might just kind of hang out where we're at for the next couple days while IWM rallies. That's all I really see on that one. Okay, gold, again, pretty much flat. We're just, pretty much just grinding around today, doing nothing. Still within our triangle, our isometrical triangle. And again, this is we're coiling, so we're looking for a breakout one way or the other, up or down. The bullish divergence that's been in play for quite a while tells me that we'll have a higher probability of breaking to the upside. But I would expect, now that it's obvious we're coiling and everybody's looking for the breakout, I've heard a lot of people talking about, gold, and they're just waiting for the breakout. So there's going to be a lot of people wanting to jump on the momentum once it starts. But I would expect some sort of a fake out move. Maybe we break down, fake out, and then break to the higher, break to the upside. So I'm open to that. And one thing though I want to point out is the dollar. Here's the DXY. So we now have a divergent high. We recently, here's the trend line we're watching. This is a daily chart going back to May 2021. And this latest high that we put in right here was higher than the former high. And yet you see momentum's turning down, pointing down. On the RSI, that is now confirmed. See how we're making a peak. So we now have a lower high in the RSI. And the PPO, as I zoom in, you can see it's starting to turn down right there. We don't have that crossover yet, but looks like it's starting to turn down. And I suspect with the RSI pointing down, it's going to point down as well. So we've got negative divergence in the dollar. Again, for the sell signal in the dollar, you really want to see a break of this trend line. That break of the trend line is likely going to be, that's likely when gold is going to break out to the upside. So we have negative divergence in the dollar, positive divergence in gold. So it tells me gold's going higher, the dollar's going lower sometime soon, but we don't have that breakout yet. Moving on. Oil, pretty much flat today as well, but we're seeing the oil stocks like XOM, they reported really good earnings and they're up 6%. That's a pretty good sized move for the oil stocks. One of the subscribers asked me why I'm not shorting oil and I'm looking to short the tech stocks. And the primary reason is, and their justification was the fact that oil is way overbought. It's really extended to the upside. And, I would tend to agree that it is pretty overbought and extended to the upside. But at the same time, I don't have technical sell signals in oil, and I did get those in tech. So on oil, you can see we're pretty much just marching higher. on this daily trend here, and I could tighten that up on the hourly. We don't, if I zoom in on the momentum, we don't really have divergences. I mean, it's kind of an equal high, or if not a slightly higher high there on the PPO and the RSI. We do have negative divergence on the RSI. So we're starting to get, signs just starting to show up of a potential reversal. No sell signal. We don't have a break of trend or anything. So I'm not looking to short something while it's in a bull trend with just, with the momentum indicators are mixed. It's just not a firm setup, to short this thing. And it's a very bullish sector right now. So that's why. And then, when I flip over to tech, it's kind of the exact opposite. We had big negative divergence. I mean, you can see that. If I go to like XLK, tech sector, negative divergence up here. All right, and then we broke trend. We've broken down. We're kind of back testing right now. They're making it look like they're going to recover it. I suspect we fail right in this area and we start to head lower. But we have negative divergences. We've got breaks of major trendline supports, and so that's why I'm looking at shorting tech and not oil. Okay, short trade idea here, LPQ. You can see this thing's just been chopping around, back testing the trendline resistance. We got a sell signal right here on January 21st. That sell signal came with clean negative divergence on the momentum, both momentum indicators. We had a trend line to watch right from coming off the July 22nd, 2021 lows. Broke trend, and we back tested once, back tested twice, back tested 3 times, and we're back testing for a 4th time. Still not, they still have not successfully been able to recover the broken trendline support. So I suspect we're going to get rejected sometime soon, likely when the markets start to turn down. Until then, we're just kind of grinding around back testing. Qualcomm, you can see here, slightly above the resistance level that I had. I kind of adjusted this slightly, but basically set 173.80. I think before I had it maybe down here. But yeah, it's right about there, 173, 174 we'll call it. And we're just slightly above it, but just barely. And this is not a breakout. All right, typically if you're going to recover a level, you're going to see longs jumping in and shorts covering, and I don't see that right here. This doesn't look like an impulsive break back into the zone where they're impulsively buying it up. So I suspect this to me looks like a stop rate area. We're just chopping around here, and we're going to roll down here in the near future. So the point is, right now, today is kind of a dead day, just kind of a waiting game day. We're waiting for these shorts to continue to work, and waiting for gold to break out. It's just nothing's really happening today. So that's all I got, guys. Leave me a thumbs up on your way out. If you got a chart you want me to look at, leave a comment below. I'll take a look. And if you haven't done so already, check out the stock market technical analysis course, link in the description below. Catch you guys on the next one.